Good evening, everyone. And my name is Wakar Khan, and I'm the Equity Research Analyst at William O'Neill India. And I welcome you all to this week's Market Wrap. Without taking much of your time, let's start the analysis of market behavior this week. This week, Nifty declined by 2.5% and remained highly volatile as news flows from the Russia-Ukraine war front remained intact. During the week, Nifty consistently traded below its 200 DMA, which remains a weak sign for the markets. We started the week, day 2 of an attempted rally, as Nifty traded above its correction low of 16,203 on Monday. Tuesday, the markets remained closed, and on Wednesday, Nifty was able to hold its correction lows for 3 consecutive days, and we shifted the market status to attempted rally. Our search for a follow-through day started on Thursday, but on Friday, markets corrected sharply by 1.5%. During the day, Nifty undercut its previous lows and made a new low of 16,133 during the day. With market making new lows, we shifted the market pulse downtrend again. During latter half of the day, Nifty tried staging a recovery but was unable to hold on to its gains in last half of the trading session. Tensions between Russia and Ukraine were in seesaw mode and kept markets highly volatile during the week. Let's talk about major macro news now. India's GDP for third quarter of FY22 came in on a weaker front at 5.4% against consensus estimates of 5.7%. Meanwhile, FY22 GDP growth was revised downwards to 8.9% from first estimates of 9.2%. GVA growth stood at 4.7% for third quarter against 8.4% for second quarter of FY22. Third quarter data does not capture the impact of entire third wave infections of COVID-19, which gained pace in the latter half of December 2021. However, increased economic impact is likely to be lower than previous waves, and as infections and hospitalizations were not as severe as previous quarter. India's GST collection posted another month of strong revenues for February and came in at 1.33 lakhs, which was 18% higher on a YOY basis. Meanwhile, GST cess collection crossed 10,000 crore for the first time since the implementation of GST. Going forward, global geopolitical tensions and higher commodity prices can act as hindrances for future growth. Auto sales was down 9.2% YOY and 20.6.5% down from February 2020 levels. US Fed had already signaled a rate hike in March meeting, and before the escalation in geopolitical tension, markets were pricing in a 50 bps rate hike as inflation in US had hit a 40-year high. But markets are expecting a lower quantum of rate hike post increase in tensions. Even Jerome Powell, in his latest testimony, supported a 25 bps rate hike in the upcoming meeting and is prepared to move aggressively if inflation does not abate as fast as expected by the US Fed. On the crude oil front, the crude oil has been touching sky high, and Russia is one of the leading producers of crude oil at 10.8 million barrels per day at par with Saudi Arabia. Brent crude oil touched $120 per barrel during the week, as it jumped 37% during the past month as fresh round of sanctions from US targeted Russia oil refining sector, raising concerns that Russian oil and gas exports could be targeted next. India's fiscal math is expected to be spoiled if oil remains at elevated levels. In the recent economic survey, GOI had estimated a range of $70 to $75 per barrel for crude oil in 2022-23. With the current crude oil prices, petrol and diesel prices needs to be hiked by 12 rupees in order to break even. Going forward, the coming week, we'll start the market with market status and downtrend, and we would want the markets to hold its recent lows of 16,133 for 3 consecutive sessions to change the market status to rally attempt, and post that a strong follow-through day to get markets in a confirmed uptrend. Markets are likely to remain volatile in coming week on account of global political tensions rising commodity prices, and major state election results. In these turbulent times, let's not bottom fish for stocks and let proper chart analysis help us guide our way forward. After an eventful week, it's time to take a break, guys, and enjoy the week. Hope you enjoyed this week's market wrap and stay safe, stay healthy.